Does history repeat itself? Do we have a good fourth quarter for stocks?
Okay, so fill in that I believe it will be a positive quarter. I've said that on air. I believe right now you have significant quarterly weakness. We'll talk about the reasons why in a second. But I do think that the prevailing trend of 2023 takes hold once again, and it's led by mega caps. It's led by technology, because in this environment, they are the companies that represent quality. They are the companies that can endure with a 30-year Treasury trading 4.70 as you come on air. That's why we're seeing the S&P in retreat right now. Coming into the quarter end, you've broken below the 50-day moving average. You've broken below the 100-day moving average for the S&P. You took out yesterday's low. Now what's in sight? 200-day moving average at 41.96. The end of the quarter is going to be sloppy. It's going to be messy. The price of oil, 52-week high today, towards $94. Inventories at ridiculously low levels. Okay. Yields higher. You've got in front of you in the near term a lot of challenges, but I think earnings come through, and you're going to get a positive return in Q4.
Sounds all good.
It sure does.
A lot of
it's optimistic.
Energy behind it. Why is the NASDAQ then the worst of the majors over the last month as rates have risen?
I would say that it was the clear leader in 2023. And I think when you have an environment where it's obvious that it's risk off, you will generally tend to see the leadership in the market be utilized as, quote unquote, an ATM. And I think that's exactly what's happened.
Farmer Jim made a call, I think it was about a week ago, which suggested, and these are your words, I believe, you're going to get a rip your face off rally into the end of the year. So you think history stays in tune here? September's bad, fourth quarter begins, and then you have a run to the finish.
Yeah, I'm going to stand by the call. I agree with everything Joe just said. I do think, and you've been saying it since July, I've been there with you, that September would be September. It's always got a reason for September being September. This one's obvious. The market is adjusting to higher interest rates, but interest rates aren't going to keep going higher. I know Jamie Dimon says differently. I don't think they're going to keep going higher because inflation is coming down. We can talk about oil, but if we're going to talk about oil, let's talk about rents, which are coming down fast. Let's talk about goods deflation. Go buy a toaster, and you'll see exactly what I mean. Now, the point that I'm driving at here is you've got a strong economy. Look at durable goods today. Look at jobless claims last week. We'll get an update on that tomorrow. You've got inflation coming down. You've got a Fed that looks like it might be done. You put this all together, you've got a price correction here for a very logical reason, and this is a good time to be buying, which is what I'm doing. I'm with Joe on this.
Okay. Number one, did you buy a toaster recently?
I actually did.
Okay.
$29.
Okay, so
I needed a toaster, Scott.
Goods inflation.
Goods deflation.
Goods inflation is coming down.
Okay.
Okay. Housing inflation is coming down. The problem is that when you try and get somebody to service the toaster, I hope you bought a good one for 29 bucks, but if you need service on it, non-housing services inflation is not coming down fast enough.
Yeah.
That's one of the issues.
Yeah.
Now, you're also betting that the economy is going to obviously remain resilient enough that you're going to have a race to the finish, correct?
Yeah. Yeah. I love what you just did, because what you just did, and you stopped short, which is fine, you started laying out the risk. There's a ton of risks out there. You want to keep going on the UAW strike, student loan repayments picking up. Obviously, there are risks. There are always risks. That's what opportunity comes from. And with the S&P 500 off roughly 7% from that late July high, and Joe, I think you're exactly right. I mean, really exactly right. The 200-day moving average is in sight. It's another 1.5%. I'm not going to cry over that. But you have to acknowledge that this year the trend is higher. I'm just parroting everything you said, Joe. The trend is higher. The 200-day is moving up. This is a good position for a fourth quarter Santa Claus rally.
I'm surprised somewhat by the results of our Delivering Alpha Investor Survey. On the markets right now, question one, do you believe this is a bear market rally or a new bull market? Jenny, 61% of those who answered this question said it's a bear market rally. 2/3. Only 39% say we've entered a new bull market. That surprise you?
Well, you know what? I actually answered that question, and then I wrote in, and I wrote, you should have given us all a third option, because I don't think it's so binary as either a new bull market.
Well, which way did you vote?
Okay, so
forget the writing. How'd you vote?
I think I put bull market, but I don't really remember because I didn't.
You don't remember?
You don't remember?
No, because I was frustrated that there were only two. Because here's what I think. I think we're in a long period of consolidation. And what I do in these really frustrating markets, remember the conversation we had after the show like 2 weeks ago or 3 weeks ago, and you're like, this market has to just start going up. It's killing me. It's like so torturous. And I'm
I don't remember that.
Okay, and I said something like, buckle your seatbelt. It's going to be a long time of torturous and painful. And you just shook your head at me. You're like, oh, I hope not. It's miserable. Like, it's miserable.